Good evening and welcome to tonight's public webinar where we look at ASX investment opportunities in review for the 21st of February. The information provided in tonight's recording is general advice only. As a reminder, Investor Signals provides a personal investor account service, which is a brokerage account established in your name or the name of your self-managed super fund. In that portfolio, we operate strategies across ASX shares, ASX exchange traded funds, US shares, and from a strategy standpoint, we look at a combination of growth and or income. The table on screen here shows the 5-year average performance of our algorithm engine on the ASX 100 shares, the financial performance year to date. All the analysis and strategy supported by my experience. I've got over 23 years experience in financial markets as a licensed securities and investment advisor. If you'd like to know more about the personal investor account service, where I'm effectively acting as your broker, placing the orders on your behalf, matching the strategy to one of our most popular model portfolios, which we'll be looking at in tonight's recording, which is the ASX Top 50. So if you'd like more information on that, please contact me 1300 614 002 or visit the website and click on the brokerage link. The three products that Investor Signals provides is a research subscription-based service, which will be the Investor Signals website. When you log in, you're presented with the following menu. Tonight we're going to be focusing on the most popular portfolio that clients follow, which is the ASX Top 50. The table here, as the name suggests, it's the current holdings. So out of all the 50 stocks that make up the index, which is rebalanced every 90 days, so new companies come in and out at an index level. What our algorithm is doing is assessing those top 50 companies on a daily basis and making a determination as to which ones should or shouldn't be in your portfolio. Tonight's recording, what we're going to do is go through the companies that are in the portfolio and by order of the ones that have most recently been added. So the current holdings table, taking the most recent stock that's been added to the top 50 model is Dexus, which is a real estate investment trust. It was added on the 27th of January. It was added at the buy price of $10.19. The last price, which is the close of trading today, was $10.86. The percent change, the stock's up 6.6% relative to the buy price. This column here tells us the days held, so we've been in that stock for 25 days. We have not yet received any dividends, so the dividends get accumulated during the holding period, and those accumulated dividends get added to the percentage return until such time as the stock goes from buy conditions, so from algorithm buy conditions, into algorithm sell conditions, at which time the stock will be removed from the portfolio and you'll find it down here under the recently closed positions. So these are stocks, if we just have a bit of a glance through there, you can see a number of large percentage gains. Fairly large holding times, you're talking more months and years with this investment portfolio strategy. Very popular for clients running self-managed super funds, or even if you're getting started with building a blue chip portfolio for the first time. Following this strategy is a great idea, so we'll be exploring that further this evening. So Dexus has been the most recent added stock. APA Group also added 28 days ago. And as we go through this list, we start looking at stocks that have been in the model portfolio from a month or two, progressing down into stocks such as Woodside that's been in there for 3.5 months. Something like Telstra been in there for coming on 4 months. As we scroll down a little bit further, you can see here we're getting into stocks that have been in the model now for about 12 months. Something like Macquarie's up 28%, been in there for 277 days. Treasury Wine's been in there for 305 days, etc. We continue down to stocks. The stock that's been in the model for the longest is ResMed, been in there for a little over 3 years, and it's up 116%. Computer Shares, another top performing stock in the model, been in there 500 days, up 95%. So if you're using this technology and you're a subscriber to the service, you obviously don't want to miss a notification when a stock is either added or removed to this model. So that's where you would turn on this envelope here beside the list, and it will email you that day when a stock is added or removed to this model. And it is an investor portfolio, so you're not expecting changes daily. You might get one or two adjustments to the portfolio over a month, or even over a sort of 2 or 3 month period. So it's not onerous to try to match your brokerage account to this strategy. But if you are time poor and you're just not getting the chance to execute those trades, that's where you would open a personal investor account, and I will look after that for you. So with that, what we're going to do is go through the charts this evening. We're going to have a look at where the algorithm engine has added this stock to the portfolio, and we'll move through this in order from the stock that's been most recently added all the way through to ResMed. So we start that by clicking on the code. We use these toggle arrows up the top here. Simply by clicking on the right arrow, display next chart in list, allows us to move through that. So Dexus has been recently added, and that's represented by this green box at the bottom of the screen. So we refer to those as the primary algorithm buyer signals. So what makes up the model portfolio is the reference to this red box up the top, which is a sell, and the green box at the bottom, which is a buy. So if we focus on those tonight as I go through these charts. So Dexus was added off the support there at around that 985 and pushing higher following that signal. APA Group switched from sell conditions into buy, added there at around that 930, and the stock now pushing up over $10. So what the algorithm's doing is picking up the end of downward momentum, or the end of a downtrend and the reversal into an uptrend. ASX have been in and out of the model over the last sort of 5 years. It's been one of the better performing stocks, generally trending higher, and we have a more recent switch from sell conditions into buy here with ASX. So the entry level there's around $80. So this is fairly close to the actual entry level. So if you were building a portfolio today, you'd certainly be looking to add some exposure. ASX at around that $80 support level there. Centre Group switch from sell conditions into buy. It's in the model portfolio, added at around that 280 level, now pushing up towards 320. Origin Energy, one of the better performing stocks from the recent names that have been added to the model portfolio. Both Origin and Woodside are in the model. In the case of Origin, after the downtrend ended, we start to have the development of a new uptrend. The algorithm flags there at the beginning of December that the stock's under buy conditions. It gets added into the model. So again, if you were a subscriber, you would receive that notification on that day as a reminder to add Origin into your investment portfolio. Since then, Origin's rallied from 470 up to 570, and the earnings continue to look quite strong there for Origin. Qantas, now under algorithm buy signals. Suncorp under algorithm buy signals. Woodside Petroleum, as I mentioned, the switch there from sell into buy. Woodside was added into the model at around $22, now pushing up towards $28. Telstra under buy conditions, and I thought the earnings result were actually pretty solid from Telstra, and the earnings outlook at around 5%, maybe as high as 6% earnings growth over the next 12 months underpins the downside risk. The dividend remains attractive, so when we look at the shift from sell conditions into buy here in Telstra, there's certainly room to add that in your portfolio if you don't already hold it. James Hardie under algorithm buy conditions, as is Ramsay Healthcare under buy conditions. And we'll have a look at a couple of the stocks in the model portfolio that we can buy today at lower prices than the original signals. Ramsay Healthcare is one of those, and we've certainly been accumulating that down near this $63 level. Sonic Healthcare under buy conditions. The earnings came in a little bit softer than the market had expected here with Sonic, but I suggest to you just from a fundamental standpoint that it's a buy on the dip opportunity here for Sonic. So it is under algorithm buy signals. The correction down here at around $36 is a buying opportunity, and you want to look at adding that into your portfolios. Brambles under algorithm buy signals, pushing higher there at around 10.20. NAB under buy conditions, so the switch from sell into buy there at around 26. Stock now pushing up towards almost $31. Coles under algorithm buy conditions, so finding support there at around that $16, $17. AZJ, we're expecting this to develop a new uptrend throughout 2022. Potential corporate action there as they look to construct a acquisition and consolidation of the assets of One Rail Group. AZJ finding support off around this 325, starting to build higher high and higher low from that level, so we hold that in the top 50 model. ANZ really bumping sideways, and if you'd been joining me for prior week recordings, we've spent a bit of time analysing the banks, looking at some of the top line revenue numbers across the banks, and each week we continue to focus on a bit of a blend of fundamental information just to enhance our subscribers' knowledge and background of the companies that make up the top 50 index. So as an analyst, I share with you some of my thoughts on the earnings trends, and that includes sort of revenue growth, profit numbers, corporate actions. Again, not that you have to take that into account. The algorithm works on the basis of tracking the momentum in the market, but just for case of broadening your understanding of markets, I try to share a bit of that information with our listeners each week. Tabcorp under algorithm buy signal, finding support there. South 32, one of the better performing stocks in the model portfolio, switch from sell conditions into buy there at around $2.70. The subsequent signal there at around $3.40, now pushing up to $4.50. Macquarie Group under buy, so the original switch from sell into buy just here at around $1.50. Now trading at around $1.90, and the most recent signal there on the low at around $1.70, and stock trading above that at the moment. Treasury Wines, the earnings came in a little bit below analysts' expectations, and I put a post on the blog a few days ago with a snapshot of the reported numbers. The market's comfortable with the earnings guidance and outlook statement from management. So we're still of the view that 2022 and 23 continues to see improving earning trends in Treasury, and you want to stick with that position in portfolio. So it is under algorithm buy conditions at the moment. Seek the correction here from 37 back to 27, back on support. That sits in the top 50 model portfolio. CBA switched from sell conditions back in 2020 into buy conditions in early 21. That was at around $81. It's now sitting at $98. The most recent buy signal was around $92 there for CBA. Woolworths under buy conditions, if we have a look at sort of where that switch occurred. So originally under sell conditions back in August 2020, and then in the early part of 21 we had the buy signal at around $33. The stock's now back on that support level, and if you've been following recent recordings or reading the daily blog, I'm of the view that Woolworths is back at a level where you want to start accumulating a position in this stock and starting to build up a position in your portfolio if you don't already hold Woolworths. Xero, this is one of our preferred technology stocks from not only the top 50, but we're looking at the top 100 stocks. Xero has an attractive growth profile, good international expansion opportunities. as with a lot of high PE stocks globally, we've seen a correction in the valuation of these names. Xero back here at around $100 certainly looks attractive. You want to start thinking about building that into portfolios. Goodman Group, looking at the history of the algorithm here, it switched from sell conditions in 2020 into buy conditions in the early part of 21. The stock since has rallied from $17 up to $22. The subsequent algorithm signals did a good job of picking up the lows, and we're comfortable that Goodman's earnings actually came in above expectation at over 15%, which is extremely strong earnings growth for a real estate investment trust. Mirvac, under algorithm buy conditions, so it's been in the model portfolio since around $2.50, sitting back on that support level at the moment. GPT, so this cluster of algorithm buy signals here, reflects when it was added into the model. That was around $4.30. The stock's now $5. Lendlease, this is one of the great recovery opportunities over 22-23. Earnings came out today. The earnings from a rear vision mirror point of view were pretty average. That was to be expected. Most of that was in the price. If we have a look closer in at the price action today, initially the market sold off on the soft earnings, but the strong outlook and the comments from management that they think that earnings are at an inflection point and the next 12 months is stronger than the prior 12 months. So that certainly fits in with my analysis of where I see the outlook for Lendlease. The contract that they have with Alphabet in the US is a real key growth plank for the company. But as well as just a normalisation of economic conditions, as hopefully the impact of COVID subsides a little and normal business conditions start to come back into play for Lendlease. So keep an eye on that one. Look for future algorithm buy signals. We're looking at potential support where it is at the moment, the beginning of a new series of higher highs and higher lows, and you want to be taking notice of the future algorithm buy signals there in Lendlease. Stockland's under algorithm buy, and you'll find that in the top 50 model. Cochlear, again, if you've been following the weekly recordings or the blog, I think this is getting down to a level that presents value, and you want to add that into portfolios. As with Aristocrat Leisure, so Xero as a technology play and Aristocrat both look attractive, and there's room for those in portfolios. Computershare, as we looked at the beginning of the presentation this evening, one of the better performing stocks, and the history there is it switched from sell conditions into buy. At that point it was added into the model portfolio, which was September 2020, and the stock's up about 90% since it was added back in September 2020. Since that signal, we've had subsequent buy signals that have also done a great job of picking up that higher-low formation. So it may be that you're simply just taking the position once on that first switch from sell conditions into buy, or it may be that you may be positioning smaller, shorter-term trades around the subsequent signals, or even adding to your original position on these subsequent buy signals. Computershare has been one of the better performing stocks, and we'll just revisit that in the table when I finish this evening's recording. Wesfarmers under algorithm buy, the original the original shift was from sell conditions in 2020 into buy conditions there at around $43. The stock's sitting around $50 at the moment. Wesfarmers earnings were soft. They contracted about, I think it was around 12 to 14%. The market had anticipated softer numbers, higher COVID-related business expenses, and impact to sales. The next 12 months should be a better picture for Wesfarmers, so you want to start thinking about adding that into portfolios on this pullback. ResMed, the best performing stock in the model portfolio, and if we have a look at the history here, it switched from sell conditions into buy there in 2018 at around $14, and the stock's now pushing up towards $31. The subsequent buy signals all again did a great job of picking up the higher low formation. So if we jump back into the model and just finish on a summary of the table. So we looked at Dexus, which is the most recent added stock in the portfolio, up 6.6%. We moved through some of the, Origin was added, it's doing extremely well. Woodside Petroleum up 31%. There's a couple of stocks that you can buy today below the original entry price. So if we have a look at those, James Hardie, Ramsay Healthcare, they're not too far from the entry signal, so either at the entry signal or marginally below. So James Hardie, Ramsay, Sonic Healthcare, I like that. You want to be accumulating that on the pullback. Coles Group, so there's only a couple at a discount. Xero, so the volatility in these high PE stocks is obviously a little greater than some of your consumer staples, for example. But Xero on this level at around $100, you want to look at accumulating that. Lendlease, I like that as a longer term recovery play in 22 and 23. And they're the only stocks. So another way of looking at that would be the percent change column. So this is essentially the worst performing stock in the model at the top of the table. So if we look at those, there's a few stocks there that you can buy at lower levels than the original signal. If we flip that around, conversely, these are the stocks that are doing extremely well, so they have strong momentum in them, but we'd be wanting to wait for a pullback in those names and an algorithm buy signal before adding those into portfolios. So the ones that we're focusing on at the moment for clients that are building a new portfolio or looking to add positions to your existing portfolio or add new positions, the focus would be around these names. Don't hesitate to give me a call on the office number, which is 1300 614 002, and always happy to have a chat with you about portfolio allocations, the market, how the algorithm works. And just remember, please jump on the Investor Signals website and take advantage of the free trial to the technology, and we'll walk you through how to set up those model portfolio alerts. So again, jump on the website or give me a call, 1300 614 002. Thank you for listening, and if you set up your 14-day free trial, I look forward to broadcasting the thoughts on the market to you next week.